Now, we will go over across the Atlantic, so this will be really a ride for you. We will go through 60 slides in 10 minutes, so please come and be ready to get your seatbelts on. To set the table, please welcome someone who has spent years mapping the deep tech landscape on both sides of the ocean. The 2026 Transatlantic Deep Tech Report is his latest. It answers the question every founder, fund, and corporate here is already asking. Where does Europe lead? Where do we lag? And where does collaboration with North America actually unlock value? Please welcome Stephen Jacobs, founding partner at Drumbeat Capital.
All right, good morning. I hope everyone's awake. We're going to go through 60 slides in 10 minutes. All these will be made available online, so don't feel like you have to take pictures. Highly suggest focusing and listening in. All right, here we go. What is deep tech? Commercializing scientific breakthroughs. What does that actually mean? It's the moment in time between when research is done being research and when it's mass commercializable. So there's a window of opportunity for deep tech startups to capture the value that's created here. 7 out of the 10 biggest companies on the planet started as deep tech companies. A, you're highly differentiated when you have a novel technology that you're leveraging. B, super defensible, very hard to unseat you. The other 3 companies on this list are expanding into trillion-dollar companies because they're leveraging investments in deep tech, such as AR, VR at Meta. To build a globally dominant deep tech company from Europe, you have to make sure you have access to all the right resources necessary to be globally competitive. Talent, capital, ecosystem partners. This has been true over the last 20, 30 years in a variety of different waves that we're all familiar with. In consumer electronics, it was the bridge between the US and Taiwan. In cybersecurity, it's the bridge between the US and Israel. In software, it was the bridge between the US and India. In deep tech, the clear partners are the US and Europe. Actually, before I get to why is that, if you want to see evidence of these bridges getting built to give globally dominant companies access to the resources they need, look at who the unicorn founders are, not only on a global stage, but we can start with the microcosm of the US. India and Israel are the 2 largest sources for deep tech founders by country, but what's hidden in this is if you aggregate Europe altogether, it's bigger than India and Israel combined. European founders are the biggest unicorn founders in the US. So, for deep tech specifically, if you want to industrialize scientific breakthroughs, you have to harness the unique resources available in Europe and in the US. If you focus on one or the other, you will be beaten by someone who does. Why is that, and where do we see it in traditional businesses today? The relationship between the US and Europe is the #1 trade relationship in goods, in services, and in information services. It's bigger than the trading relationships with either country and China. The one really interesting statistic, when you look at the most recent trading data, is the one area where Europe exceeds the US is physical goods, which means the industrial capability of Europe is actually larger than that of the US. There is more export value coming from Europe than from the US in physical goods. Those are deep tech companies. So when you're comparing the ecosystems, the capital markets in the US are deeper. I think everyone knows that. The commercialization experience in the US, along with the customer base in the US, much faster, earlier adopting, understand how to work within a variety of different customer profiles. But the research talent in Europe exceeds that of the US. We'll get into it in a second. In addition to the supply base and the industrialization partners. So Europe has certain strengths in blue, US has certain strengths in green. When you look at where the technical talent is coming from, about half of it, the top technical universities in the world, are in the US. About a third of them are in Europe. But when you look at where the STEM talent exists, there's about twice the amount of STEM graduates in Europe from top technical universities than in the US. There's a deeper, more educated talent pool in the US in STEM than there is in the US. Very similar to the dynamic that we saw with India when it came to software talent, and I think we all saw how that played out over the last 20 to 30 years. Half of the top 5 Fortune 5 CEOs are from India. Okay, so digging into deep tech companies specifically, there are more deep tech companies in Europe than in the US. Again, see above, twice the number of STEM graduates in hard sciences in Europe than in the US. When you look at where the funding is, though, the vast majority of it comes from the US in green here, over 50%. When you look at the funding in Europe, on the left-hand side here we have US, mostly US funding. In Europe, European VCs fund early-stage companies. It peters out pretty quickly when you get above $40 million. And US VCs are funding the vast majority of successful European deep tech companies. When you look at early-stage companies, seed rounds that are being done, it's actually fairly similar capital availability in the US and in Europe. The amount of capital being deployed into seed stage deep tech companies is about the same if you ignore the spike in mega rounds in the last year. But when you look at Series C plus companies, it's a very different story. Europe is barely visible. Again, deep capital markets in the US, if you're a deep tech founder, you need to leverage those. Right? Hopefully 10, 20 years from now, there'll be deeper capital markets in Europe for later stage venture. They simply don't exist today. So if you want to build a globally dominant deep tech business, you have to prepare your business and your fundraising abilities to access the capital markets in the US around Series A, maybe Series B, but usually around Series A. Where are deep tech founders building? It's a pretty even mix, green is US, blue is Europe, between the cities in which deep tech founders are building companies. But when you look at the cities where VCs are investing in companies, where capital is deployed, vastly the US. Although you do see European hubs emerging in every single sector, which means if you're a founder building in one of these sectors, go to the hubs where capital is being deployed. That's where talent is, that's where ecosystems are, that's where commercialization partners are. That's where you want to be if you want to build a globally dominant business. Again, 20, 30 years from now, it might disperse a bit. Today, get to a concentration zone as fast as you can. When we look at how deep tech in purple compares to regular tech in gray, we'll actually see that in the US, investment in deep tech companies now exceeds that of investment in all regular tech companies, including all applied AI companies in the US. However, over half of that is going into the mega AI companies that we all know. So it's a little bit misleading. But in both Europe and the US, the investments in non-AI deep tech still exceed every other fraction of regular tech investing. Deep tech is bigger than health tech, bigger than fintech, bigger than vertical SaaS, et cetera. If we look at funding rounds over time, we've seen a stabilization across a variety. I'm going to zoom in on US data because there's just more of it available today. If we look at seed rounds, so if you're a founder in the audience, we're focusing on seed here. Median seed round size is 4.1 million. Median seed post-money valuation is 20 million. Median seed dilution is around 21%. The valuations and the fundraises have gone up about 2x in the last 5 to 6 years. So we're seeing a steady increase in capital availability to deep tech companies. And lead investors take about 50% of the company. All this data will be available in the report for deep tech founders, so feel free to access it when constructing your rounds, and we'll do it for all the rounds. Zooming in further on seed, about half of seed companies raise equity rounds, so actually taking equity onto the cap table, and half raise safe or safe equivalents. But only 25% of capital is raised on safe or safe equivalents, which means if you're raising a large round, it's going to be an equity round even at seed. If you are raising a safe, 80, 90%, both in the US and Europe, are raised through safe notes. So stop using convertible debt notes. They're out of date. Nobody uses those anymore. Almost always using valuation caps. Discounts are on the decline. If you're using a valuation cap, it's a post-money valuation cap. If you're using a discount, it's 20% or less. That's on a structural decline. If you're looking at graduation rates between the US and Europe and deep tech and regular tech, the graduation rates in the US are 2 to 3x higher percentages than in Europe. What does that mean? If you're a seed stage deep tech founder and you're accessing the capital markets and the resources in the US, you have a 2 to 3 times greater likelihood of getting to unicorn, decacorn, or exit status. If you stay isolated to Europe in today's environment, you simply can't do that. So this doesn't mean you have to leave Europe. It does mean you need to access the resources available globally, namely in the US. It's also worth noting that deep tech companies have a higher success rate in today's environment than regular tech companies, which means you're in rarefied air if you're building a deep tech business. If you look at the speed with which companies can raise venture capital and scale their business, the US is about a year to 2 years ahead of the US at every structural stage of funding. Exit timelines are still within a 10-year venture time horizon. There's nothing about deep tech that doesn't fit with typical venture profiles. If you look at the amount of revenue you should be generating at different stages of fundraising in order to be attractive to a top-tier, let's say, Silicon Valley VC, by Series A, if you're a seed founder in the audience, you really want to have about $5 million in revenue run rate to be in the top quartile. And that needs to triple and then double after that if you want to remain competitive with the other potential investments that top-tier investors can make. Finally, if we look at unicorns, decacorns, and exits, unicorns in the US and Asia are vastly outpacing Europe. Again, see above, accessing the resources you need in both Europe and in the US to be globally competitive. In the exit market, the vast majority of exits by count are M&A. But the vast majority, 80–90% of actual value created in exits is through IPOs and SPACs, namely IPOs. So if you're a deep tech founder, focus on creating an IPO-ready company. Have that as your vision. That is where the vast majority of value is captured. M&As, for the most part, either aren't venture scale outcomes or are a soft landing for a business that isn't working to the potential the founders originally thought it could have, but is still a valuable business for another company to acquire in. In terms of where deep tech funding strengths lie between the ecosystems, obviously the US is dominant across a wide variety of technologies. Quantum, advanced materials, space, and photonics are areas right now that Europe is punching above its weight and is globally competitive. If you look at the bottom line in terms of quantum cryptography, the US is essentially irrelevant. Europe is doing all the kind of forward progress on that technology. This will continue to grow for Europe's share. Again, see above, as European technical talent starts leveraging global resources, we're going to see a widening of the areas in which Europe is competitive and dominant. Zooming in on these quickly, in terms of where capital is being fundraised, again, Europe is just simply not raising as much capital as they could if they accessed the resources in the US. In terms of novel AI, it's almost all the mega rounds with the hyperscalers that we've seen. Future of compute, Europe has now scaled to be about on par with where the US was 2–3 years ago. Hopefully that continues to scale in an exponential fashion. Robotics, similar thing. Europe punches above its weight in terms of technical talent, but the capital simply hasn't been deployed there. We have to access the global capital markets. Space tech, Europe has been in steady increase, but there are no mega rounds that have occurred yet here. That needs to change. Our friends who came on stage earlier at ESAR and Constellar and the exploration company, Helene's up there, they need to start raising massive, massive rounds to compete. Defense capital, again, we all know that this is a big theme in Europe, still about on par with where defense capital was 2–3 years ago in the US. We need to start seeing the exponential inflection here. Those are going to come through mega rounds, multi-hundred-million-dollar fundraisers. Novel energy, Europe actually had quite a big spike here, but unfortunately that kind of petered out as the green transition didn't go through. What's important here is that we have to create strong businesses that are commercially viable in order to push forward an agenda that we think is important for society. If you start with the principles of the business, but you don't actually deliver value, those businesses tend to fail, and that's what you see in the chart here. I think the next generation of successful energy startups are ones that build incredibly productive businesses and do so in a way that they feel is societally acceptable. Finally, advanced materials. This is an area where Europe punches above its weight. We saw a huge investment in 2023, and that's kind of petered out. Ideally, there's a resurgence here. I think this is an area where Europe can exceed the US within the next year or two. OK, so what did we cover quickly? Number one, deep tech can scale into global champions very, very accessibly. 7 out of the 10 biggest companies in the world started as deep tech companies. 2, you need talent, capital, and an ecosystem. 3, you have to leverage a transatlantic bridge if you want to build a globally dominant deep tech business. If you don't, you will be beaten by someone who does. Europe has extremely strong research and technical talent. The US has go-to-market experience and customers that are willing to adopt quickly. There's a similar number of deep tech startups in the US and Europe, a similar amount of seed funding in the US and Europe, dramatically more later stage funding available in the US, and customers who are able to adopt faster. This leads to higher graduation rates and faster scaling if you have access to the resources of the US. Again, you do not need to move there. You simply need to access the resources available there. M&A is similar, but the real value driver is IPOs. And finally, leverage the early talent, funding, and industrial base of Europe and the later stage venture exit markets and go-to-market experience with the US. How do you do that? Work with a firm who specializes in it. Any questions? We have microphones going around. Perfect.
Hello?
Hi.
Yeah, Philip Gerber from Venture. I would have one quick question because you mentioned SPACs. Or I was astonished that they are coming back, giving the abysmal performance they had before. Any comments, any observations on that?
I think that they're relatively new. So SPACs, for anyone who might have missed it, They're a relatively new innovation on like the financial instrument side. The first round, honestly, there was just kind of a lot of grift. Right? There was a lot of people who took advantage of people who don't really know how it's going to go or how it's going to work. I think on one hand, people should approach with caution, right? Like they should, especially if you're joining a SPAC, you want to make sure that the financial performance of the instrument that you're joining is good. On the other hand, they do get those companies in the public markets, and they can access not only big, equity investment opportunities in the public market, but it dramatically lowers your cost of non-dilutive capital in debt markets and other markets to be a publicly traded company. So there are structural advantages to just gaining access to the public markets if you can't go through the traditional door of an IPO, although that is the path that I believe deep tech founders should follow. The final comment would be after the outcomes that you alluded to, there was just changes in how those SPACs were done, right? Provisions were put in place, investors are smarter, they're looking for opportunities that fit, I think, a more, not conservative, but responsible profile, hopefully. So the next wave ideally should be better than the first wave, and it will continue to improve. So I'm not here necessarily as a proponent of SPACs, but it is worth keeping an eye on from a data perspective. Any other questions? If not, I can leave early and we can all LinkedIn post.
Wait, I have something.
Yeah.
Stephen, that was really, really insightful. One number from the report that really surprised even you.
It was great to see that there's more deep tech companies forming in Europe. It was great to see that the early stage venture capital ecosystem has caught up to the US. If you're an early stage deep tech founder now, and I was before becoming a VC, you can raise capital in Europe relatively easily from investors that you know well, that live close to you, that you can work closely with within your ecosystem. That's a wonderful thing. That didn't exist 5-10 years ago when I started investing in deep tech companies in Europe. So that's a huge transformation, and I think we just kind of crossed over that threshold. Now, the next step in our collective journey is figuring out, OK, how do we not only create local resources to incubate, but global resources to scale?
Makes complete sense. If you were a European founder hearing this for the first time, what's the takeaway you would want them to write on the wall?
Yeah, hopefully that's obvious. So, I'm betting my career on the fact that a transatlantic bridge between the US and Europe is going to create global champions out of both ecosystems that not only compete well against their neighbors and traditional incumbents, but also against growing global competition coming out of China and other parts of the world. So if there's one takeaway, it's there was an era in time where the Mittelstand era, where building a local hero was kind of the thing to do, and that's a perfectly commendable thing to do. In today's very connected global world, if you want to be relevant in 10, 20, 30 years, you have to build a global champion. That's also how countries gain power on the global stage, to build something the rest of the world wants. So there's one takeaway. It's focus from day zero on building a global champion in whatever it is that you want to do, and access the resources you need to do that. Start small if you need to. That's perfectly fine. But by the time you're raising, say, Series A, you need to be thinking about accessing the resources in both ecosystems, or you will be beaten by someone who does.
Makes complete sense. And where will this report look most wrong in 2 years from now?
One more time?
What do you think will look most wrong in your report in 2 years from now, hopefully, and why?
I think right now, in many of the funding charts, Europe is relatively flat or a slight kind of steady marching increase, right, which I think is accurate and makes sense. What isn't reflected is how quickly exponentials can grow.
Right.
So I think when we look back 5 years from now, I very much expect to see some exponentials start to take off in a variety of those industries. We're starting to see that in the US, especially around AI, for example. And it's just the data's not visible yet. But when I meet with founders, when I see what the ecosystem's doing, when we look at the resources being assembled, it feels like we're at that inflection point. So I don't know that that's necessarily something that's wrong with the report, but it's something that's not currently visible in the report.
Makes complete sense. Yes, thank you for reframing. Thank you so much, Stephen. One stat from the New Deal Room ranking before we move on. Paris just overtook London as Europe's leading tech ecosystem and ranks 4th globally now, behind only the Bay Area, New York, and Boston. The map is moving under our feet, and that's exactly what these next 2 days are about. Thank you so much, Stephen.
Thank you.